Jeff Peterson from Heartland Farm Partners is our market analyst this week. The latest USDA crop progress report shows no change in the condition of soybeans across the country, but it does indicate improvement in corn. The agency moved 2% of the crop from good to excellent. In Nebraska, favorable weather aided the advancement of corn silking 41 points and jumped it from 8 points behind the state's 5-year average to 6 points ahead of it. We talked with Jeff Friday morning and started by asking about the shape of corn and soybeans across the state.
You know, it's been an interesting year, Jeff, but overall, so far, starting off on corn first, 73% good to excellent. That's really not too bad of a start. It is down from last year, though, that we were 76%. We looked at the national average. We are above the national average. Nationally, we're setting at 69%. Good to excellent, so Nebraska's faring all right. Over on the bean side, just a little bit less, 72%. That compares to last year at 73%, but we're a full 10 percentage points ahead of the national average that sits at 62%.
You see there's a big difference between the eastern and western corn belt?
Yeah, there's huge differences. As we dig into those numbers a little bit closer, starting off first with Illinois, on the corn side, Illinois is 55%, and it goes downhill from there. We actually see Missouri hits at 55%. And then we come in with Indiana all the way down to 50%. And the corn numbers are good compared to the soybeans.
Yeah, those soybean numbers are really quite awful, and we talked about those last week on the show. To what extent right now do you think weather is driving this market?
You know, it's still all about the weather. If we were to sum it up, it's about the weather and the fund position, but weather's definitely driving it. The market's really concerned about what the yield is going to be. And they're really kind of looking at it right now and saying, well, the eastern corn belt looks like it's going to be a little bit below average. Western corn belt, though, there could be some very good yields. As a matter of fact, Nebraska will probably have an average type year, but you take a state like Minnesota, they very well could have a record this year.
You go back maybe a month, maybe even a little bit more than that, and did something switch where the weather clicked it from going down to going back up, the market I'm talking about?
Yeah, exactly. Big change. You know, if we go back to about the 15th of June, everybody was looking for that market to go lower. And at that point, the market was really thinking rain makes grain, but the change happened. The funds at that point were short about 300,000 contracts between corn, beans, and wheat. They flipped around and they saw the conditions start dropping, and Jeff, they came in and bought 600,000 contracts. At their peak at the middle of July, they would have been about 300,000 contracts long between corn, beans, and wheat. And to put that in perspective, they purchased about 3 billion bushels worth of grain. That's a lot of grain.
That's a lot of grain. To what extent right now is demand having an effect on this market?
You know what, it's in the back of everybody's mind, but so far the focus is all on supply. There's going to be a lot of discussions about demand as we go forward, and we have to keep those in the foresight because our old crop demand has been good so far, but new crop is a little bit of a concern.
Because?
Main thing is right now those countries, as you look at them stepping in, our prices are just a little bit too high. As we look at the soybeans, we're seeing South America really continue to sell grain to our customers that normally we would be stepping in and making some sales. And then on the corn side, we're seeing some of that happen also.
Why do you think that is, that they're still getting grain from South America?
Yeah, there's a couple items going on. One of it is actually, if you look at the U.S. dollar, definitely the U.S. dollar comes into play. The other thing that's happened is that in the countries, in particular Brazil and Argentina, their currencies have dropped. And when their currencies have dropped, what that's actually done is that's actually paid their producers. They're paid in their home currencies. So if the U.S. dollar is higher and theirs lower, they're actually getting a better price than what they would normally expect. So they have been very willing sellers of grain.
A couple of big media outlets this week talked about the weakness in commodities, specifically gold and oil. When you look at oil, what effect could that have on corn and soybeans?
You know what, that's something we always have an eye on. That always gives us a headwind. Main thing is because of ethanol and the big part that it plays in our demand side. And anytime we get that weakness in the oil market, that makes this market hard to go up. It makes funds hard to get excited about buying those markets.
Give me an update on your positions for 14, 15, and 16.
Yeah, on the 14, we'd really like to be getting sold out of corn. You know, we're out, and if you haven't got out, I would recommend getting sold out on the 14. On the 15, we have a heavy book of sales on. We do think for this move, though, it's probably pulled back about enough for right now, but I would be another ready seller if the market bounced up to about 420 on the corn side and probably around the $10 on the bean side, and start also looking to make some new crop sales on the 16 also.
What about basis here as we start to approach that harvest season?
You know what, basis on the old crop actually is weakened as we'd expect, but as we look to the new crop, it's weakened a little bit also, But the thing I would say on basis is that there's still enough uncertainty about when this harvest is going to come about because of the lateness in planting in some areas. I think we'll see a little bit of firmness coming in on that basis as we get closer to harvest.